Well, good morning, everybody. Welcome to the first meeting of the SCPA in 2013. If I can just remind everybody to switch off their mobile phones and any other electronic gizmos that they've got. I understand apologies have been received from Ian Gray. Now, our first item of business is to agree to take agenda items 5 and 6 on the corporate governance of Audit-Scotland in private. Are members content with that?
Agreed.
Agreed. Thank you. And our second item today is to consider Audit-Scotland's annual report and accounts for 2012-13 and the auditor's report on them. Now, the Commission is responsible for securing the audit of these accounts and has contracted Alexander Sloan, Chartered Accountants, to undertake this role. But we'll hear first from Audit-Scotland and then from Alexander Sloan. So if I can welcome from Audit-Scotland Caroline Gardner, Auditor General, who's also the Accountable Officer, Ronnie Cleland, the Chair of Audit-Scotland's Board, Russell Frith, the Assistant Auditor General, and Diane McGiffin, the Chief Operating Officer for Audit-Scotland. Perhaps I can invite either the Auditor General or the Chair of the Board to make some opening statement.
Thank you very much. Good morning. Our Board oversees Audit-Scotland's work and strives for high standards of governance and management. With the obvious exception of the new Auditor General, Board membership remains the same as the previous year. I'm pleased to report that the Board has matured and been strongly focused on the challenges facing the organisation over the past year. And this has seen the transition of the organisation's leadership, with a new Auditor General being appointed in July 2012. The Board has also kept a close oversight of significant corporate projects, and in particular the new audits of community planning partnerships, which I know have also been of interest to the Scottish Parliament. We met 9 times, which included a strategy meeting during the year, and the Audit Committee met 4 times. The Board has an Audit Committee which appointed our internal auditors and receives our annual accounts and internal audit reports. We also have a Remuneration and Human Resources Committee which sets and reviews the salaries for senior staff, excluding the Auditor General, as well as the main terms and conditions for all staff. I'm pleased to say that this committee expanded its remit during the course of the year to good effect. The remit is set out on page 25 of the annual report and accounts. This committee met 5 times during the year. As the Board of Scotland's Public Audit Agency, we are of course aware of the challenges facing Scotland's public sector at this time. It's clear to me that in such an environment, the need for independent and effective audit is more important than ever. The Board's focus, therefore, has been on making sure we use the resources we have to maximise the quality and impact of our work. I'll now hand over to the Auditor General to give her report.
Thank you, Convener. I'm pleased to present my first annual report to the Commission. As the Chair of the Board noted, the financial climate for Scotland's public services continues to be very challenging. Against that backdrop, making the best use of public money is more important than ever, and I believe that public audit's got a central role to play. I'm very conscious that we also have a responsibility to get as much out of our own resources as possible and to deliver value for money. During this year, we completed 214 annual audits and published 26 performance and best value audit reports. The topics covered ranged from health inequalities to how major IT contracts were managed, and from waiting lists in Scotland's hospitals to new work such as the audits of community planning partnerships. Many aspects of our work received widespread media coverage and resulted in parliamentary debate and discussion. One of the things I've particularly noticed during my first year as Auditor General is the extensive use of Audit-Scotland publications as reference materials for parliamentary debate on important and relevant topics. Internally, we have continued to deliver on our promise to reduce the cost of audit by at least 20% over 4 years. In fact, we reduced audit fees to public bodies by 10% in the last completed audit year, and will continue to reduce fees in the 2012-13 audit year. We also delivered £2.8 million of efficiency savings, with further details on page 20 of the annual report. Our voluntary release scheme, in particular, has contributed to reducing our costs and reshaping our workforce, and we entered 2012-13 ahead of schedule in our workforce plan. We're now focusing on strengthening our structure, skills and technology to ensure we've got the capacity we need to deliver our responsibilities. Finally, Convener, my first 9 months in post confirmed what a privilege it is to lead Audit Scotland in supporting the Scottish Parliament and public bodies to meet the challenges they face. And on a personal note, I'd like to thank my colleagues at Audit Scotland and my fellow board members for the warm welcome that they've given me over the last year. Thank you.
Thank you. And a warm welcome to yourself, Auditor General, since this is your first time in front of the Commission. Perhaps I can start with some questions simply on staffing in relation to the annual accounts. 7 staff were granted early retirement or release in 2012-13 at a cost of £386,000. Now, 2 of them costed between £100,000 and £150,000. How has Audit Scotland applied the key messages in your recent Managing Early Departures from the Public Sector report in respect of designing the business case for early departure scheme that you operate and ensuring it provides good value for money? And what sort of regular checks do you carry out against estimated savings?
We think that our voluntary early release scheme has been a key part of making sure that we can deliver the efficiency savings we're committed to and keep up the quality of the work that we are committed to producing. We do, as you expect, take very seriously the need to comply with the good practice principles that we set out in our report for all public bodies. First of all, our scheme itself is a very good value for money one compared to experience elsewhere. People are entitled to 1.5 weeks of severance pay for every completed year of service that they have. We don't give added years on pension schemes, although there may be a strain cost for people having access to their pension entitlements earlier. So in those terms, it's value for money. And of the £313,000 that you mentioned, only £96,000 relates directly to severance payments for people, for individuals, about £12,000 on average per head. We do go through a process where managers produce a business case for every individual application which is considered by the management team. We look at the net savings over a 3-year period that are intended to come from the application if it's approved. And we then monitor that those savings have been achieved in practice over the following 3 years. So we're currently monitoring the outturn of our 2 earlier years of the voluntary severance scheme. I'm not sure if Diane wants to add to that in explaining how we manage it.
Nothing much to add other than that there's an annual report to our board on the follow-through and delivering the savings from previous years VERA applications, so that there's an accounting for the delivery of the planned savings, and the board considered a report on that at its last meeting.
Perhaps I can refer you back to your report on managing early departures, where you indicated that the longer the payback period, the more difficult it was actually to identify the savings or to firm up the savings. You say that you're doing this over a 3-year period. How does that compare with other public sector bodies?
We found a range of practice in other public bodies when we were carrying out the audit work for the report that you refer to, and saw payback periods that go to 4 years and in some instances further than that. So we're right in the centre of the periods that we looked at. It obviously also matters what net savings you see over that period. And we have got a figure which I can't lay my finger on just now for 782,000 net savings over the 3-year period, once you've taken account of the £313,000 upfront cost of doing it. So the period itself is very much in line with good practice, and the net savings that we produce over that period we believe we can demonstrate a value for money.
Still going down that road, your whole-time equivalent headcount has actually increased from 255 to 260. And I don't know how that fits in with the early retirement scheme, whether they're coming in as a cheaper replacement or what. And you're stating that this remains less than the headcount that was planned. What was the planned amount for 2012-13, and which 5 posts have actually been added?
I'll kick that off and then ask Diane to pick up the detail. The average number of staff we had in post for 2012-13 was 260, which was 9 fewer than we had in post in 2011-12. And part of the aim of the voluntary release scheme is both to reduce headcount but also to shift our skill mix so that we have more junior staff able to carry out a wider range of tasks and a smaller management overhead. Diane, I think, will be able to help you with the detailed figures on that.
The average number of people that we employed, the average number of full-time equivalents we employed during the year was 260, which was 9 fewer than the average number employed last year, which was 269. The figure of 255 and 260 are the snapshot at the end of March of the whole-time equivalents. The establishment figure planned for 2012-13 was higher again, and we had some vacancies over the period that we held or were in the process of filling, and so on. So we're ahead of our workforce plan, and what you see is a snapshot of where we are at the end of March, and the average number of people employed during the year lower than the previous year.
You mentioned about the 5 staff notional increase there being at a more junior level. I presume that is not a dumbing down, having got rid of more senior staff, that the skills haven't, the overall skills haven't been reduced, and that we're not looking at trying to do audits in the cheap or something.
Absolutely not. I'm fully committed to making sure that the quality of our audit work not only meets the auditing standards and ethical standards that we're required to comply with, but goes much further than that in making sure we can demonstrate an impact for Scotland's public services. What we are doing, though, is targeting our management structure and management costs to make sure we can justify every pound of that, and using some of the savings we generate to invest in grades D&E, which are the people who deliver audit work, so that we're really keeping that quality up and making sure that we can invest in the capacity we need to deliver our responsibilities.
Just last question. Your sickness absence has increased from 4.77 days in 11-12 to 5.95 days in 12-13. It's still below the public sector average, which is pretty high. Is this something that you should be concerned about?
When we monitored the figures for this year, it was obviously a question that occurred to us as well, and the board considered a report on this again at its last meeting. When you analyse the figures, it becomes clear that the increase is mainly due to a small number of staff with specific health problems, either serious health problems that has required them to take time off, or a couple of accidents that have occurred outside work. We do have a very strong HR function on getting people back to work in those circumstances. So overall, we're not concerned about the pattern that we're seeing, although clearly we do want to make sure those individuals are back at work as soon as possible and in full health.
Angus?
Yes, thank you. Thank you, Convener. Good morning. On page 16 of the report, it states that Audit Scotland has trainees, or 27 trainees, working towards professional accountancy qualifications with the Chartered Institute of Public Finance and Accountancy and the Institute of Chartered Accountants of Scotland. And I note, I was certainly pleased to note in the report that 2 of the trainees have won prizes. Neil Cartledge has won the SIPFA Prize for Governance, Public Policy and Ethics, and Gillian McCready's the top student employed in public audit in Scotland. So congratulations to them. I'm curious, though, as to why there are 2 training schemes in place, and is the training route with ICAS and SIPFA optional for trainees?
Thank you. We were delighted as well at the success of our trainees, and they've generally done very well this year. The fact that we currently have 2 training schemes in operation is a transitional issue. Audit Scotland used to train with SIPFA, and then about 2 years ago, before I was appointed, carried out a review of the training arrangements and made a decision at that point to move to ICAS for a range of reasons, which included value for money. We're now, I think, in the 2nd year of trainees coming through that scheme, and we monitor it very closely to make sure that it's fulfilling what we need, both in terms of the quality of training and also the specialist skills that our staff need to audit public bodies. So far the results are very encouraging, but we will be keeping that under review as it's such a major investment for us in cash terms, but also in developing the workforce that we need for the future.
Okay, thank you. Given the differences between SIPFA and ICAS, have the training costs varied between the two? 2 institutes, and have the success rates varied between the 2 institutes?
Thank you.
Thank you. Given the differences between SIPFA and ICAS, have the training costs varied between the 2 institutes, and have the success rates varied between the 2 institutes?
Thank you.
ICAS and SIPFA in your experience?
Value for money was one of the reasons for the decision to make the shift, I understand, but that decision was taken before I took up my role. I'll ask Russell Frith, if I may, to provide a bit more information about that movement.
Yeah, as Caroline said, value for money was one of the considerations, but it was by no means the only one. The principal consideration was the quality of training and the type of training that was being offered. And there were changes that had been made by SIPFA in the way they were organising their training, which was one of the factors we took into account. As for the track record of success, it's still really too early to say, because the two training schemes operate their exam systems in very, very different ways. As far as we can currently tell, then the ICAS trainees are doing as we would have hoped. But as none of them have yet reached the end of the training, with the final exams, which are very different in ICAS from SIPFA, it's too early to give you a definitive answer on that.
Okay, and when would you expect to be in a position where you're using ICAS solely rather than SIPFA?
About another 18 months.
Okay, right, thank you.
John?
Before I ask some questions on board governance, could I go back to an earlier question that convener asked with regards to your sickness absence? What is that in percentage terms?
I don't know if we have that figure available. Dan, have we got that?
I can certainly supply that to
That
you.
would be helpful. And do you think that perhaps the sickness level increases perhaps anything to do with the fact that you're reducing your workforce?
We don't think it is. That's one of the questions that we were looking to answer when we reviewed our experience over the last 12 months. The concern was obviously with the headcount coming down and our expectations for quality not reducing, that there may be an impact on the well-being of our staff. But the figures demonstrated very clearly that what we were seeing was the average being pushed up by a small number of people with serious either illness or accidents who were out for a longer period of time, rather than a steady rise in the average sickness per head. As the convener said, 5.95 days per year is quite a lot lower than the public sector average, but we're not complacent about it. We do monitor well-being in general very carefully.
It would be good to know if Diane could get that percentage terms. With regard to some questions on the board governance, on page 25, we note that the board may appoint persons who are not members of the board to be members of or advisors to the Remuneration and Human Resources Committee, and may pay them such remuneration and expenses as the board decided. Is Audit Scotland considering co-opting someone onto the board?
I'll make a first answer and then hand over to Ronnie. Both the Remuneration and the Audit Committee terms of reference, standing orders, make provision for people to be co-opted onto those committees, which are not decision-making bodies, in order to strengthen the skills and experience available in those specialist areas. Those provisions haven't been used to date. Ronnie, I guess.
I think it is an option that we are considering, and perhaps we'll speak a little bit about this later, but it does arise when there is a situation where there may be a change of membership of the board and also of the committees, and in order to retain continuity and the level of skills within the committees, then I think it's certainly an option that we would utilise if we decided it was appropriate.
If that were to be the case, what involvement would you see or envisage the SCPA being part of that appointment?
My understanding of this is a standing order that has been approved by the board of Audit-Scotland, and I think it would be an exercise where we would be happy to take it aboard with some due process within the remit of the organisation.
So the SCPA would be kept fully informed if that
absolutely
was an intention?
Kept informed. Yes, I think it.
And
don't want to trouble
would there be any? What consideration would be given to the cost of such an appointment?
The cost of such an appointment would be absolutely minimal, in a sense that if we were to take a member of the Audit Committee, then that would be, what would be involved there would be attendance at 4 or possibly 5 meetings per year, with some time allocated for the preparation of papers. And so we would absorb that cost within the operating costs of the organisation.
You would absorb that within the cost of the organisation? You would absorb the cost within the existing budget?
Yes.
But again, that would be something you would bring to the board before?
Oh, absolutely, yes. Yes.
Yeah. Okay then. On page 18, the report also says that the board has also kept a close oversight of our new audits of community planning partnership. How does the board assure itself that it does not cross over into areas that are statutory responsibility of Audit General for Scotland or the Accounts Commission?
The board is very clear on its role in terms of the split between executive activity and the governance role that it has. And if we were to take that particular example, we were very keen to make sure that the objectives of the programme were met, and that Audit Scotland was providing both the Accounts Commission and the Auditor General of Scotland with the resources that it and she require to carry out the report. And we had it on our agenda as a standing item for a number of months, just to make sure that the resources were in place and the progress that they wished to make was being maintained. We had no interest in the detail of how it was maintained, because that's the executive responsibility of the Accounts Commission and the Auditor General.
Again on page 18, and again just for the committee and for the record, the report also states that the board has agreed a framework which sets out the principles of partnership working between the Auditor General for Scotland and the Accounts Commission and Audit Scotland. Can you therefore explain this partnership framework in more detail, given that the Auditor General for Scotland and the Accounts Commission direct Audit Scotland, which the board oversees?
The Auditor General to pick up on that one.
Certainly. As you know, Audit Scotland is a quite an unusual organisation in that it exists only to provide the services required by me as Auditor General and by the Accounts Commission for Scotland. And the aim of the framework is to make sure that the various roles of people involved in that are clear, and to work through the way in which the Auditor General and the Accounts Commission can agree their own objectives and how they come together to make sure that Audit Scotland can fulfil those requirements, that it can do so in a way that's value for money, and that it can, as far as possible, get the advantages of being able to look right across Scotland's public sector to avoid duplication, overlaps or fragmentation. The framework has actually been in place for some time now, and I think it may be appropriate to review it over the next 12 months just to make sure it's working as we intended to, but it simply is a straightforward piece of housekeeping to reflect the different responsibilities of me as Auditor General and the Accounts Commission, and the way that Audit Scotland supports us in fulfilling our responsibilities.
Sorry.
Yes.
Yes, thank you. Staying on page 18 of the annual report, it states that most internal audits in 2012-13 achieved substantial assurance, the highest standard available. Can I ask which internal audits did not achieve substantial assurance, and which level of assurance did they achieve?
Certainly. Dan, would you pick that question up?
We had an internal audit on business continuity planning, and it was reasonable assurance because there were a number of areas that we could implement to enhance the business continuity planning that we do, and we're in the process of working through those. So that was a very helpful internal audit for us because it identified some improvement actions we can take. One of the reasons the business continuity planning was in the internal audit plan was to assist us identify how we might even better manage our risks.
So that's one example.
That's one example, and I think that the other one was on the implementation of SharePoint which is an ongoing project, and there were 2 actions out of that which we are implementing as well. And again, reasonable assurance. There were no limited assurance internal audits at all, which would be the lowest rating. There are 3 possible ratings.
Okay.
Thank you, Convener. I note that the fee income this year was for the year discussed in the report was 136,000 greater than budget. And this is described as being mainly as a result of increases in agreed fees compared with budget. Can you explain the variance given the general decrease in fees being charged?
Certainly. I'll ask Russell to pick up the detail, but in broad terms, the way our fees work is that we set an indicative fee for each audited body, but that the fee that's agreed can vary up or down by 10% to reflect the particular circumstances of that body and particularly the quality of its financial management and internal controls. Russell, can you pick up the background to that?
Yeah, as Caroline said, the budget is set on the basis of the midpoint of the fee ranges for each body. The individual auditors are then allowed to agree the final fee with each audited body, depending on the issues that are expected to arise in that audit and on the quality of controls and quality of draft accounts for each organisation. And on average, the auditors will agree income a very small number of percent above the midpoint across the year, which explains why we have a slight increase over the budget in fees overall. So that's made up of 200 small variations, some up, some down.
Yeah. Okay. There has, of course, been a significant reduction in costs across the board in 2012-13. But on page 21 of the report, I note that there's an increase in the legal and consultancy support cost of 37% year on year, from 552,000 to 760,000. What's the reason for this?
Yeah, the principal reason for that is the amounts that we pay to the Audit Commission to run the National Fraud Initiative, which occurs every second year. And that is this year. That was approximately 200. It was just over £200,000.
So it's simply an exceptional cost. Or
it's one that occurs every second year.
Indeed. Yeah. Okay. Fees and expenses paid to appointed audit firms fell from 899,000. Fell by 899,000 from just under 6 million to just over 5 million. As a result of the recent procurement exercise to appoint firms for a 5-year period taking into account price, how do you minimise the potential risks associated with this decrease, such as firms simply using lower experienced or qualified staff?
Can I pick that up initially and then ask Russell to come in behind it? One of my prime priorities over my first year in the job has been to really make sure that we are keeping the quality of audit up. I'm very conscious that we're spending public money on our own services. I genuinely believe it's a very important contribution to confidence in public services and public spending, and that it's particularly important at a time when we are seeing budgets falling and demand rising. There clearly is a risk as we're pushing costs down, both of our own in-house audit practice and of the firms that we contract with, that quality might start to slip. So we've really focused attention within Audit-Scotland on the quality of what we do. I've refocused Russell's role to make sure that he can really have that independent challenge on the quality of all the audit work that's carried out on behalf of me and the Accounts Commission. And we're putting together a framework that really ensures all of our quality work is pushing in that direction, as I say, not just to hit the professional standards we're required to meet, but also to go further than that as part of our ambition to be a world-class audit organisation. I'll ask Russell to pick up some of the detail of how we do that in practice.
Yeah, as Caroline said, we've not only not reduced our emphasis on quality, we've actually increased it as the pressure on costs has increased. We carry out reviews of some of the plans that the audit firms and indeed our own in-house teams produce. We review the outputs, we carry out surveys of the audited bodies to get their views, not only in sort of is the audit quality acceptable or not, but ask them for real feedback on things that could be improved, things that work well. So we are maintaining and indeed increasing our emphasis on quality. So far, we have not seen any adverse impact on the quality of audits and the compliance by firms with the auditing standards since the cost came down.
You're confident that there's no danger that the firms involved are taking a less intensive approach as a result of the lower costs?
We're confident that they are maintaining the quality, but we are remaining vigilant on that.
Indeed. Looking at this policy again, but in the slightly longer term, is there a danger that it may have the effect of causing experienced firms to simply not become involved in the bidding process in future? And is there a danger that we may lose quality as a result of that?
There is always a danger that firms change their business strategies, but our experience of the last procurement round a couple of years ago, where we were introducing price competition explicitly, was actually that we had the strongest competition for our work than we've had for probably a decade. So our experience to date has been actually the opposite of that.
Thank you. The final question I wanted to ask is a fairly simple one, but it's one that I have to be careful that I get my own head round. And that is that does compliance with the government's financial reporting manual, as required by the accounts direction from the Scottish ministers, not require the balance sheet statement on page 38 of the report to be called the financial statement of financial position?
Statement of financial position is the term that is now used within the International Financial Reporting Standards. However, a significant number of organisations, in an effort to make their accounts remain as understandable as possible, stick to using terms such as balance sheet. It's not wrong. It is simply a different term, and in practice means exactly the same thing.
Okay, thank you very much.
Angus?
Yes, thanks. A charge of £204,000 has been made in this year's accounts to meet any output tax that may be due for previous accounting periods, which is confirmed in Note 4, other administration costs on page 49 of the report. And as you'll know, the figure was 352,000 in 2012. The management letter from Alexander Sloan states that it has considered the provision and the contingent liability for VAT as disclosed in the accounts. Has this been included within provisions in the statement of financial position or the balance sheet?
I'll ask Russell to pick up the specific answer. Before doing that, I'd just like to reassure the committee that we are taking very seriously the need to resolve this VAT position. I know it's been a long-running issue and one of concern to the Commission in the past, and we can update you on that as well if that would be helpful. But Russell can answer the detailed question.
The answer is yes. It's the 204,000 is included in this statement of financial position. Yeah.
Okay, thank you. And I think perhaps the final question, certainly for me, is with regard to the operating leases for vehicles. The figure was £467,000 last year. How many vehicles does this include, and who is entitled to these vehicles? And perhaps you could also expand on the business case for this.
In terms of entitlement to vehicles, if I start with that, while perhaps Russell finds me the number, the entitlement to vehicles comes with particular grades of staff, primarily now in our audit services group. So the people who are out delivering audit, who need to be mobile, need to be able to move across Scotland and be flexible in getting efficiently to and from various audit locations. We pay a lot of attention in the delivery of our audit to visibility and presence on client sites, and it's important therefore that we're able to get staff to and from different locations. We have looked at the value and the cost benefit of car schemes, and I've made a number of adjustments to membership of it over the years, so it's currently at its lowest level ever, and is restricted to members of Audit Services Group who are primarily working in key audit grades. There are a few members of staff who have legacy entitlement to cars as part of, because they had previously had them as part of their terms and conditions, and we've subsequently changed terms and conditions, and those entitlements expire when those people are either promoted into roles which no longer carry that entitlement or leave the organisation. So we manage it quite tightly. We've introduced an extension to the lifespan of the leases from 3 to 4 years, and that's something that happens with the extension of each lease. And we introduced a cap on CO2 emissions on the sort of range of cars that people can have. So we do regard it at the moment as a fairly essential part of the equipment to do the job for some staff, certainly not for all staff. But even given that, we manage it and review it on a regular basis to make sure it's delivering value for money.
Thanks. I had a slight feeling of déjà vu there, Convener. I'm sure I asked that question last year. Just on legacy entitlement, do you have a figure of how many have still got that?
I think it's probably less than 20 off the top of my head.
Okay, thank you.
Just again, I think I may have asked this question last year, but probably an update on it. How much of your business do you actually outsource audit business, and how much do you keep in-house?
We appoint auditors from either the in-house audit practice, our Audit Services Group, or from one of 7 firms, I think, and Russell will keep me straight on the numbers, for the annual audit work only. Of that annual audit work, about 65% is done in-house and about 35% done by the firms, although that varies across different sectors. Do you want to add to that, Russell?
That's absolutely right. And then in addition to that, we bring in consultants which may or may not be from the same firms to support some of the performance audit work.
And of the work that you outsource to another company, do you then top slice the charge that you would make, or do you provide the outsourcing company with the full price, or do you top slice it?
It's not quite top slicing, but I'll ask Russell to explain how we recover our share of corporate costs through that mechanism.
Yeah, what we do is we operate a uniform charging mechanism for all audited bodies, so that the amount they pay should be the same whether or not they are audited by an in-house team or by a firm. Now, given that the firms offered us differing discounts when we went through the procurement process, we have to even that up. So we even that up across each sector by taking the total costs for that sector and allocating them across the audits evenly or proportionately to the size.
So do you then make a small income from outsourcing your work?
We make a contribution to our other costs. Our target is that overall we will break even. That is our statutory. That's our statutory target.
Right. Okay.
Can I maybe come back on one point, which maybe I misunderstood? In relation to VAT, did the Auditor General say she was going to add something to that?
No, I reflected, Convener, that I know this is a long-running issue and one that's been of concern to the Commission in the past. If you'd like to know more about progress, then we're very happy to give you information about it, as well as to answer the specific question asked by Mr MacDonald.
Certainly, I think I'm aware VAT is a very difficult one to resolve, but I know the Commission would be anxious to see a resolution on that one.
Yes, and we're
perhaps
very
you could
keen.
have some feedback at some point on it.
Certainly. We had our most recent meeting with HMRC on the 6th of June, so it's a very live issue and we're pushing very hard to try and finalise it. We'd be happy to come back to the Commission with a written update once we know the outcome of that meeting.
Ask members if they have any individual questions they would like to add. I've got a couple on in the report actually. If you turn to page 13, where you've got your feedback, some of the feedback seems a bit low. Perhaps you could have some comment on that.
Certainly. I'll kick off and again ask Russell to come in. We were obviously concerned in relation to FE colleges this year that the question of value for money is both low compared to the results we have for the NHS this year and to previous experience in this sector. We think there are a number of things going on there, and I'll ask Russell to talk through what the factors are. But we do take seriously the results of this feedback and make sure we're following it up both centrally and through the individual auditors appointed to colleges. Russell.
Yeah, thanks. First of all, I'll just clarify that what the value for money line means is it's about the impact of the audit on the value for money that the college is achieving. It's not about whether the audit itself was value for money. And in the case of the FE colleges, they are all relatively small public bodies. They have very tight audit fees, and therefore our expectations in terms of the scope of the audit are that they will concentrate on the financial statements and on governance matters. There is therefore less resource available for making an impact on the way the colleges achieve value for money than there is in the local audits of some of the bigger organisations such as councils. And that is, I think, probably the major reason why the response is lower on that question than it is for other parts of the public sector.
It would have been interesting, actually, perhaps for the Commission to see historic figures. I realise they're not in the reports here, but it's difficult to see these in isolation as to whether they're improving or deteriorating. And maybe some consideration could be done in that in the future, because just to see a figure of, say, 60 or 70 or 50 doesn't really have much meaning in terms of what's actually behind it.
Recognise that, Convener. We have this year introduced a new transparency and quality report, which is referred to just below the table on page 13. I'm starting to need reading glasses here. I'll ask Russell to tell you a bit more about how we go about that.
Yep, and just to pick up on that, yes, completely agree with that. However, these are the first surveys under the new appointment round, and we took the opportunity between the appointment rounds to change some of the questions and the way that they were presented. So direct comparability of these figures with the previous ones for health and FE wouldn't be, they would not be directly comparable, whereas we would expect the next surveys in those sectors to be much more comparable. And so, yes, it would be more relevant to then put the comparative information in.
If you'll bear with me, I'm just going through the bits I highlighted here. Obviously, staff costs as a percentage of overall costs have increased in this last year from 56 to 59%, which is obviously going a wee bit the wrong way.
Been our success in reducing other large categories of expenditure, particularly the cost reductions that we saw from the last audit tendering exercise that Russell's referred to, and the reduction in our property costs as part of the property strategy to reduce the number of buildings we have across Scotland. So the absolute value of staff costs has come down, but you're right, their proportion has gone up because our overall costs have come down more quickly.
Now, just looking at page 27, there's been some changes in the benefit to kind. Is this purely related to pensions? I'm just trying to clarify what that is.
The table in the remuneration report, the benefits in kind relate all to members of staff with leased cars, as we were talking about a moment ago. The most significant change relates to the Chief Operating Officer, whose entitlement to a car ended last year when she moved from her previous post to the post of Chief Operating Officer, and she no longer has a car with the new role. 2 members of the management team do have cars on a continuing basis, and we keep that under review, as Diane said it when she answered the more general question.
Okay. Just bear with me for 2 seconds while I carry on through here. Intangible assets, which are not a huge figure, but 51,000. What exactly are they?
I think that relates entirely to software licences, and Russell's confirming that's right. It's the licences for the software we use on our corporate information systems.
In fact, I think I asked that same question last year.
And the answer's the same, I hope.
But you can be sure I'll be back again. Travel and subsistence has increased from a fairly low level.
It has increased slightly. We think it's increased by less than RPI has across the piece. Interestingly, we know that the number of miles that staff have travelled has decreased by 10%. So that's all a cost variation rather than a volume variation. And we can see the impact of the number of miles reducing in our carbon emissions, which have also come down significantly.
Okay. Quite a substantial increase in staff recruitment costs on page 49.
Diane, do you want to pick that up?
Yes, as we discussed, I think, last year, we had ended our recruitment freeze, having had a hold on recruitment for some time. So this reflects the associated recruitment activity to support introducing new staff, recruiting the graduate trainee scheme, to the graduate trainee scheme, as we discussed before. And also, even when there's internal recruitment, we organise assessment centres so that we ensure we have objective evidence for interview panels to make appointment decisions on.
Okay. Page 51, I'm looking at additions to leasehold premises. 269,000.
That reflects, again, the shift within our property strategy, and I'll ask Russell to pick up the background to it.
Yeah, the additions to leasehold premises this year is the fit-out costs of the new Glasgow office that we finally moved into in last month. Yeah.
Hope you had a big celebration. Page 52, I'm looking at trade and other receivables. I'm looking at work in progress in advance of billing and prepayments. What would the prepayments be?
Prepayments are simply where we've paid the cost of something, for example, an annual subscription in 1 year, but it lasts throughout a period that straddles 2 financial years.
Well, subscription, £542,000.
That's just an example. The same can apply to rent, for example, which we would pay typically in February for the next quarter. So by the end of March, you've only used half your rent payment up.
Okay. And work in progress in advance of billing.
Yep.
I mean, I realise it means what it says in the tin, but I'm curious as to...
We have an agreed cycle with all the audited bodies whereby we bill them typically 3 times a year, whereas we're incurring the costs of carrying out the audit from both ourselves and the firms on an ongoing basis. So that number builds and then drops away again at each billing point to the audited bodies.
On page 53, rather an unusual one. Staff untaken holidays, 603,000. I'm not sure I've ever seen that accrued like that before.
You should have seen it for, I think, the last 2 years in the same place. It was a clarification of about a change to an international accounting standard which required organisations to account for any untaken leave as at the end of the financial year. So in our case, for example, our leave year is to the end of December. People can carry forward up to 9 days. And then they earn some of that, some more leave between the end of December and the end of March. Typically, people don't take very much leave between the end of December and the end of March. So we have to accrue the cost of that earned leave that they will then take off, typically during the summer.
So you've already charged staff expenses, staff salaries for this leave, and when they take it, you disperse it from there. That's
correct, yes.
Okay. Deferred income, 420,000. Same page.
Yep. Deferred income is for the reverse, if you like, of the work in progress. It's where we've actually collected money in advance from, or collected money from audited bodies that exceeds the value of the work done to that particular point in time.
Page 57, 18, contingent liabilities. You reduced your accrual for VAT, which effectively meant that you achieved your reduction in expenses. But you're saying here that a further liability of 160,000, which you haven't accrued, could arise. Isn't that a bit of sleight of hand with the accounting? In other words, you achieved a reduction in overall expenses by reducing your accruals for VAT, but then it says here that you've got a liability of potential liability of 160,000, which could arise.
We actually made an additional charge for VAT. The creditor that was in last year's accounts in notes 12, you'll see in note 12 on page 53 that the 2012 VAT figure was 311,000. We paid the majority of that over to HMRC, and we have charged an additional 200,000 in this year's accounts to reflect what we now consider to be the most likely outcome of the discussions with HMRC.
On page 21 you say that part of your savings were a lower accrual for VAT of £148,000.
It explains the movements from one year to another. In other words, we have made, last year we made a charge of around 300,000. This year we've made an additional charge of around 200,000.
I'm going to have another look at that. I won't take up the time of the Commission on this just now, but I'd like to just be sure in my own mind what's happening there. On page 57, at the top of the page there, payable after 1 year, 489,000. I'm being lazy here. I couldn't see where it appears, other than there.
It is part.
I gave up very quickly, I must say.
Okay, it is part of the obviously the 568,000, and just looking where we.
Page 38 on the balance sheet or
Yes.
statement of financial position
Yes.
under other provisions.
Yep. Yeah. So if you look, page 38. Other provisions, about 3/4 of the way down the page, 489,000.
Okay. Do any members have any other questions they would like to ask at this point? No? In that case, thank you very much, and I'll suspend just for a few minutes so that we can have a witness changeover. Recommence, and perhaps I can welcome Andy McBean and Stephen Cunningham from Alexander Sloan, the external auditors to Audit Scotland. Maybe I can just ask Andy McBean to confirm that Alexander Sloan received all the necessary information and explanations to inform the opinion on the accounts and to provide an overview on any observations arising from that work.
Thank you.
Just.
Good morning, Convener. Yes, I'm happy to confirm that we received all the necessary information and explanations to allow us to undertake our audit for the year to March 2013. I would like to give an overview of our work. As you will be aware, Alexander Sloan have been appointed to carry out an external audit of Audit Scotland's accounts. We're required to provide an opinion as to whether the accounts give a true and fair view, whether they've been prepared in accordance with international financial reporting standards, as interpreted by the Financial Reporting Manual, and to confirm that they've been properly prepared in accordance with Public Finance and Accountability Scotland Act 2000 and directions by Scottish ministers. We carried out our interim audit in February this year, and our final work was carried out in May and early June. This work was carried out in accordance with international standards on auditing. As I mentioned earlier, we did receive all the information and explanations that were required to carry out our work, and the audit was completed without any significant issues or problems. We signed our audit report on the 12th of June 2013. Our audit report is unmodified. That is, the accounts do give a true and fair view, and there are no significant matters which require to be brought to the attention of yourselves or other readers of the accounts. We're also required to prepare a report to management. The purpose of this letter or report is to summarise the key issues arising from our audit, including following up on the main audit risks identified at the planning stage, and to report any weaknesses in the accounting systems and internal controls that have come to our attention during the audit. I'm pleased to report that in the course of our audit work this year, we did not find any weaknesses in the accounting and internal controls. Finally, I would just like to record my thanks to the staff at Audit Scotland and to the support staff at the SCPA for all their assistance during our audit this year.
Thank you for that. Just a general question. In relation to all the answers you heard, you were obviously sitting in the committee room, the answers you heard from Audit Scotland. Do you have any comments to make on any of the questions that we asked and the answers that we received?
I think one point, Convener, was just, obviously you'd raised a question near the end there on VAT. Obviously appeared to be a bit of confusion there. We can obviously just confirm that the overall liability and amount of VAT that is due has actually increased during the year, in terms of a further liability going through the accounts for £204,000 in addition to what has previously gone through the accounts. And that additional amount within liabilities is definitely the case. And so the fact that there was a doubt over the movement from one year to the next, but that's a further 204,000 has been set aside due to a review of how discussions are going with HMRC.
Does that mean that the 160,000 that's mentioned as a potential additional liability is on top of all that?
Yes. I mean, there was in the accounts last year a contingent liability figure as well, but that was a higher amount, and some of that contingent liability has been moved from a contingent liability effectively into an actual liability within the accounts, because it is more likely now that that will be payable, and that's why it's appearing within liabilities and not as a contingent liability.
Okay. Perhaps I can throw it open to members. John, I think pretty much yours has been answered.
I think Mr McBean, more or less in his introduction, answered my question, but you did say that whilst there were no significant issues with regards to the cooperation by Audit Scotland, was there any issues whatsoever?
No, I mean, there weren't issues. I think, as with all audits, that there are areas where we've identified that we have to put more work into, and that included areas like the VAT, basically, which we're satisfied with the work calculations that have been carried out by Audit Scotland, but obviously we put resources into that area to make sure that that was the case, and that we were satisfied with the overall level of liability appearing within the accounts and within the contingent liability note. So in that sense, it's an important issue that we have to deal with, but we were able to resolve that more than satisfactorily.
Alex?
Thank you. In your very thorough opening statement, you seem to come very close to answering my question as well, but it's never stopped me asking a question a second time before, so why let it break the habit of a lifetime? In your report to those charged with governance, as required by international standards on auditing, ISA 260, and in your report to the Audit Committee of Audit Scotland, did you raise any matters that the Commission should be aware of?
You just
Sorry.
I could pass it down to you if you like.
No, I've got the page.
In your report to those charged with governance and to your report to the Audit Committee of Audit Scotland, did you raise any matters the Commission should be aware of?
No, there are no particular matters we need to bring to your attention. We obviously have a closure meeting at the end of the audit, which we discuss the areas that, again, we do a similar thing. We look at the audit risk we identified, we look at the work we've carried out, and we will have final discussions just to gather the final bits of evidence that we need to be satisfied to give our opinion. So that final meeting was satisfactory. The main issue discussed at the final closure meeting was the question of the VAT. So, and we've obviously had a fair discussion with that today, so that there's nothing else I would need to bring to your attention.
Thank you.
Angus?
Thanks, Convener. Yes, I mean, you've covered in your follow-up the the issue of the 204,000 charge to meet any output tax that could be due. And you'll recall that I mentioned, I asked Audit Scotland on that earlier this morning. Now, given that you've mentioned a review of the situation following discussions with HMRC, I'm just curious as to what your view is of the response from Audit Scotland this morning, and also if you could perhaps advise us on how long the discussions with HMRC are expected to continue until the matter is brought to a conclusion.
I think on that second point, I would say that I can't comment on that because we are not part of the negotiations. We are not advising Audit Scotland on this area. Audit Scotland are dealing directly with HMRC. We have obviously reviewed their correspondence to date. I am aware as well that there was a meeting on the 6th of June as well between Audit Scotland. So I think the matter is likely to come to a head during the course of the coming year. It has dragged on for a few years now, but I couldn't specifically say exactly when that will happen. I think the main discussions have been built around the original effective date of registration for VAT purposes, and its movement on that date that has resulted in additional liability, which is still to be finally determined at the end of the day. But on the balance of probability, an additional liability has been put into the accounts to take that into account.
Okay, thank you.
Okay, do members have any other questions they would like to ask Alexander Sloan? No? Is there anything you would like to add to what you've advised already?
No, I think we have covered everything, and I think the answers from Audit Scotland were obviously areas we had looked at and considered as well, and so I think sufficient information, I think, has been on the accounts has been passed on to yourselves.
In that case, thank you very much for your attendance. Much appreciated. now propose that we move to agenda item 3, which is the annual report for the parliamentary year 11th May 2012 to 10th May 2013. And you'll recall that we agreed to align the SCPA's working practices to those of the parliamentary committees, and these include producing an annual report. What I would propose is the report consists of 2 pages. If I just go through these pages 1 and 2, you can then make any comments and maybe we can agree it. So page 1, page 2.
Agreed.
Are members content with this report? Do we agree it should be published this week?
Indeed.
Thank you. And as agreed earlier, we move into private session.